Hi everyone, Dale Pinkert here. My Twitter handle is Forex Stop Hunter, also trading mentor and coach in the Eagle's Nest. If you're interested in my teachings and the hows behind some of my forecasts here on the network, you could reach me on Twitter at Forex Stop Hunter. Send me a direct message. I want to start off with something short term and crude. Last week I talked about the breakdown of this falling wedge and think there's a lot more downside in the crude oil market. Holding up relatively well today, considering the big follow through we're getting in the forecasted correction in the stock market. And US dollar yen still showing no sign of bottom, but perhaps getting close. So when I look at this crude chart, to me, it's pretty simple arithmetically. You have a $4 decline so far at 58. That would take it just the rectangle to 56 to 54. I have moving averages just a shade above 56. I think eventually lower 50s is viable going into late April, early May. The next chart I wanted to show was the daily on the Nikkei because, as you know, although I'm looking for corrections in US indexes anywhere fib 50%, 38, 61.8, believe that there's potential for a new low in the Nikkei that we will trade under this low that was put in late December, early January, beginning to roll over back under 2008, 20,800. It's going to be pretty negative. We have a little double top in formation here. And if you're short, you'd probably need to manage your risk with closes back over 21,900. But looking negative, and I think will outperform on the downside compared to the S&P, Nasdaq, and Dow. And every once in a while, I like to look for something that might just start being developed, and perhaps I'm a little early, but as you can see from the daily Aussie Kiwi chart, it's been trending down for quite some time, back over 112. We're starting to get some daily divergences here. Looking for some type of reversal to happen sometime this week, and then some type of recovery. Your first sign of it doing something right would be back over the 103.50 level. 104.20 would definitely change the picture for just a bear market rally, no Super Bowl market, but why can't we correct after going from 112 to call it 103.9? Correct 50% of this decline would take it back to 106 and a half, 107. Remember, don't just count your pips, count your blessings. See everyone tomorrow. Dale Pinkert on Twitter at Forex Stop Hunter. Adios.